The United States government has shut down, not due to war or natural disaster, but because Congress and the White House couldn't agree on funding. When federal spending halts, everything from national parks to passport processing, from federal workers' paychecks to small business loans, can be affected. Today we'll explore when the government might reopen and what the consequences will be if the shutdown drags on. 1. Why and when might it reopen? Shutdowns happen because Congress fails to pass appropriations bills or continuing resolutions that fund federal agencies. In 2025, funding expired on October 1st, triggering the shutdown. Reopening depends on lawmakers passing new spending legislation. But as of this moment, the Senate has failed multiple times to advance a temporary funding bill. Senator Kelly recently said the shutdown could wrap up this week, but only if parties sit down and negotiate. So the timing is uncertain. The government could reopen in days, or the shutdown could stretch into weeks or more. 2. What continues and what stops? Even during a shutdown, essential services continue. Military operations, federal law enforcement, air traffic control, fire and rescue. But many non-essential services are halted or slowed. National parks and museums close. Federal workers are furloughed or asked to work without pay. Government loan programs, permits, and inspections get delayed. For example, the Smithsonian museums were closed for visitors during the 2025 shutdown. 3. Short-term consequences. The immediate effects can be seen quickly. Federal workers lose income, reducing consumer spending. Private businesses that rely on federal contracts or permits face delays or cancellations. Economic data releases, jobs reports, etc., get postponed, complicating decisions by the Federal Reserve and markets. Analysts estimate that each week of the shutdown could cost the U.S. economy $7 billion to $15 billion in GDP. 4. Medium-term and structural risk. If shutdown lasts, more serious risks emerge. Confidence in U.S. government finances and processes erodes. That translates into weaker investment, delayed infrastructure spending, and slower growth. Travel and aviation sectors face bigger threats. Staffing shortages at TSA and air traffic control could lead to delays or safety issues. Social programs and federal support systems, food assistance, veteran claims, rural development, begin to strain, especially in states heavily reliant on federal funding. 5. What if it drags on? The worst-case scenario. Imagine the shutdown continues without resolution. GDP growth gets knocked back maybe by 0.1 percentage points or more per week. Federal workers go without pay for weeks. Even if back pay is guaranteed later, many households suffer now. Markets may react, increased volatility, risk premiums rising, corporate investment pulled back. Business Insider. The U.S. loses ground globally. Security, regulatory oversight, federal research and infrastructure all decline while adversaries exploit the pause. 6. What this means for investors and citizens. For citizens. If you're a federal employee, contractor, or business linked to federal programs, prepare for interruption. For investors, a prolonged shutdown signals risk, growth slows, government stimulus is delayed, operations stall. Defensive assets may shine, risk assets may underperform. Watch for changes in consumer spending, employment data, government delays. These are the cracks before larger problems. A government shutdown isn't just political gridlock. It's an economic shock with real consequences. When the machinery of government stops, so does the flow of money, confidence, and investment. Stay informed. Stay calm. And if you found this insight valuable, subscribe to JP Finance to stay ahead of the next big economic move. This is JP Finance.